Hello listeners and viewers. Welcome to Kaduna State Ministry of Education Radio and TV e-learning program designed for our SS3 and other students staying at home due to the coronavirus pandemic. The present administration, under the able leadership of His Excellency, Malam Nasir Ahmed El-Rufai, is positioned as always to ensure that under his leadership, our students are not left behind in all areas of human endeavors, especially education. Kaduna State is the center of learning. Therefore, we want to ensure that our students excel in their forthcoming examinations and beyond. Students and other learners at home are given this opportunity in order to continue learning, as education is a continuous process. Different subjects will be taught in this program to assist students to perform excellently in the forthcoming Senior School Certificate examination being conducted by NECO and WAEC as soon as schools reopen. Teachers making presentations will always provide their names and phone numbers during each presentation, and they can be contacted for questions, further explanations, and/or clarifications. The following numbers and contacts can also be reached for expression of any concern or observation: 090-865-00545 or 080-383-62072. Our website is www.education.kdsg.gov.ng. Our email education@kdsg.gov.ng or education.kdsg@gmail.com. Our YouTube channel, Ministry of Education, Kaduna State. Our Twitter handle @Kaduna_MOE. Or our Facebook page, Ministry of Education, Kaduna State. Stay safe, stay at home, and learn well. Thank you, happy listening, and happy viewing.
Hello students, I'm your regular financial accounting teacher, Mr. James Yaru. I'm here once again to take you on financial accounting, a subtopic under partnership accounts. And the subtopic is dissolution of partnership accounts. The outlines of what we are going to discuss under dissolution of partnership are: 1. Definition. 2. Reasons for the dissolution. 3. Rules for distribution of assets. Then 4. Entries in books of account. Now, dissolution of partnership is defined as the coming to an end of a partnership agreement. In other words, it is the breakup of a partnership business. Now we are going to look at the reasons, because some of you may ask, why is it that the partnership that is operating optimally may decide to dissolve? These are the reasons here, as you can see, which of course I'm going to discuss them one after the other. 1. Bankruptcy of a partner. If a partner becomes bankrupt or financially stressed or broke, that will affect the other partner and the business stands dissolved. Then number 2, the death of a partner. Also, this is enshrined in the partnership deeds. Once a partner dies, the partnership stands dissolved. Then number 3, joint decision by partners to dissolve the business. They can decide, all of them, that the partnership business should be dissolved and it stands dissolved. Number 4, time fixed for the partnership has expired. If the time for the partnership, if it is 2 years, if it is 3 years, if it is 4 years, depend on the time agreed in the partnership deeds or articles of association. Then, when that time reaches, the partnership definitely will be dissolved. Number 5, if a partner becomes crazy, nobody would like to make any business with somebody that is mentally deranged. So as a result of that, once a partner becomes crazy, certainly that partnership will become dissolved. Then number 6, the retirement of a partner. A partner may decide to retire from the what? From the partnership. Once that happens, definitely the partnership must be dissolved. Now, number 7, insolvency of the partnership. Insolvency and bankruptcy are almost the same meaning. That is, if the partnership become bankrupt, become financially stressed, has no money to continue the business, they are operating at a loss, then they have no option than to dissolve the partnership. And this is the case, as you can see. Then we have rules of distributing assets. If the partnership is dissolved, there are rules. You cannot just distribute the assets or share the money anyhow. These are the standard rules to be adhered to. 1, losses must be paid out of capital. Losses incurred during the partnership operations must be paid out of the partner's capital. Number 2, payments and liabilities to outside creditors. The set of people that will be settled are outside creditors. Cash payments will be made, and liabilities also will be settled. Liabilities refers to debts, or will be settled. Those that will collect second are the creditors. Then number 3, payment of partners' loan. There are partners that gave loan to the business. That is, in the event that they were in need of money, instead of them to go out and borrow that money outside, one of them would decide to say, I have the money, just take the money. So if, peradventure, some partners gave money as loans to the partnership, then they are the one that will be paid in the second point. Then 4, settlement of partners' capital. Having done that, then partners' capital will be settled, will be given to them or paid to them. Then number 5, any profit or loss on the realization must be shared in their profit sharing ratio. Having undergone all these processes, what is left, they are going to share it. If it is profit or loss, they are going to use their ratio to share what is left. Then, having discussed the rules of distributing assets, I'm going to now discuss the steps that will be taken in recording entries in the books of account. Step 1, open a realization account. If a realization account is open, you debit realization account and credit assets account with book value of asset. If I say book value, and the real value of their what? Of their prices. Then except cash. You are not going to include cash, but all the assets are going to be what? Taken care of. Then step 2, when assets are sold, when the assets are sold, what you have to do is you debit cash or bank account and then credit realization account. Step 3. Any asset taken over by a partner, because some partner may decide to take over some assets. A or Beatrice will say, I'm taking one car. Then Mary will say, I'm taking another car. So when an asset is taken over by a partner, you debit partner's capital account and credit realization account. Step 4, any expense on dissolution, you debit realization account and credit bank account. Then step 5, pay off the creditors. If the creditors are paid off, you debit creditors and then credit bank or cash account. Step 7, discounts received from creditors. When discounts are received from creditors, you debit creditors account and credit realization account. Then step 8, pay off any loan due to a partner. debit loan account, and credit bank or cash account. Then we have step 8, the balance of realization account will be transferred to the capital in their profit sharing ratio. Step 9, if any partner's capital shows a debit balance, he or she must bring in cash to the amount of the deficiency. That is to say, if a partner has overdrawn his account during the sharing, instead of him to get something, he is owing. So he will be asked to bring in the money to the amount that he is owing. That is what this place is saying. So if there is any debit balance accredited to any partner, he will be asked to bring such an amount so as to balance the account. Then finally, the cash balance must be equal to the total standing in the capital accounts of partners. It's just like balance sheet. The total balance of the capital balances must be equal to the total appearing on the credit side of the cash account. And once they are not the same, then a mistake must have been done somewhere or made somewhere, or errors must have been committed somewhere. Then we are going to use example 1 to discuss how accounts are prepared. Example 1, Ladan, Myray, and Beatrice are in partnership, sharing profits 3:4:2. The balance sheet as at 31st December 2018 was as follows. Then we have on the debit side, their capital. Ladan had 13,800, Myray 25,000, Beatrice 16,075 naira. Then creditors, we have 14,567 naira. Then loan 1,670 naira, bringing the total to 71,112 naira. Then on the credit side, fixed assets, we have 24,780 naira. Stock, 13,552 naira. Debtors, 30,000 naira. Then cash, 2,780 naira, bringing the total as well to 71,112 naira. Then we have on 1st January 2019, they dissolved the partnership, and the following events occurred. Ladan took one of the fixed assets, motor van, at a value of 800 naira. The remainder of the fixed assets realized 20,000. Then the debtors realized 28,000. The creditors were paid off 13,500 naira. Liquidation costs were paid 750 naira. Stock realized 13,000 naira. These were the assets, their new prices, which representing the cost, the selling price. Then the one in the balance sheet representing the what? These are the selling price, and the cost price are the ones that are in the balance sheet. Now we are going to see how now required or prepare A, realization account, B, cash account, C, capital account of partners. Now the solution. Ladan, Myray, and Beatrice realization account for the year ended 31st December 2019. Now, the old price are going to be written on the debit side regarding the fixed assets representing the cost price. We have fixed asset 28,780 in the balance sheet. 24,780 naira. Then we have stock, 13,552 naira. Debtors, we have 30,000 naira. Then we have liquidation expenses, 750 naira. These liquidation expenses, that is when the business is being dissolved, we employ one a laborer or the other, and then we incur these expenses. So we have 750 naira. Then on the credit side, these are the new prices. The old price was 24,000. Here, fixed asset, 20,000. Old price, stock, 13,552 naira. New price is 13,000 naira. Then we have debtors, 30,000 naira. New price, 28,000 naira. Then creditors in the balance sheet, we had 15,000 naira in the balance sheet. But the person that is buying the business decided to reduce 3,000 naira. That is the difference. He is going to take the amount of creditors 12,000 instead of 15,000. So that is a discount. The difference between the 15,000 in the balance sheet and also the taking over 12,000 is 3,000. So it is what? A discount. So now we now reflect it on the credit side here of the account or the realization account. Then asset taken over by Ladan, 800 naira is represented here. Then, having done all these things, we are going to add the total of the credit side and add the total of the debit side. Then having added the total, then we subtract it. The difference, this is the total of the debit side, and this is the total of the credit side. Here, share of losses. This shows that at the end of the day, they incur losses. And under normal situation, the total of the credit side is supposed to be greater than the total of the debit side. But the reverse is the case. Since the reverse is the case, now we are going to share the losses on the credit side. That's what you can see here. The difference between this total here and this total of 69,082 naira, the difference is what? 6,215 naira. Then already, as we've known, the ratios were given. The ratios were 3:2, 3:4:2. Then we added 3 plus 4 plus 2. The total gives us 9. And that is why Ladan has 9/3 times 6,215 naira. This is the total. And also Menrei has 4/9 times 6,215, and the total gives us 2,762 naira. Beatrice has 2/9 times 6,215 naira. The division gives us 1,381 naira. So if we add their share of profit together with the total assets realized, the total gives us 69,802 naira. Then, we did not stop there. We are going to prepare the cash account. The cash account, as we've known, records only cash transactions. This is how the cash account will look like. Balance brought forward 2,780. Fixed assets 20,000. Debtors 28,000. Stock 13,000. Then we have 13,500. Liquidation cost 750. Loan 1,670 naira. Now capitals. This account, these are the balances of what? Of the capital account, which I'm going to discuss later. And I said, if the balance of the capital account is not the same with that of the cash account, then we are wrong. So now we have capitals, Ladan 10,720, 928,000, Mainrei 22,238 naira, Beatrice 14,694 naira. If you add the total all, you will arrive at 63,780 naira. This is the capital account. The capital account for the year ended 31st December 2019. On the debit side, this one is done in a columnar manner. We have Ladan, Mainrei, Beatrice on the debit side, and then Ladan, Mainrei, Beatrice on the credit side. This is their capital account extracted or brought from the balance sheet. Ladan has 13,800. Meray has 25,000. Then Beatrice has 16,075 naira. Their share of losses, if it were share of profit, we are going to add with their capital. But since it is a losses, since losses were shared, we are going to debit it on the credit side. That is why you see their share of losses on the debit side. Ladan has 2,072 naira. Then Meray has 2,762 naira. Beatrice has also 1,381 naira. Ladan took over one car. He is going to pay the money. See how he is, that is where you can see the car, the money of the price there, 800 naira. Then you add 800 naira plus 2,072 naira. Then subtract from 13,000. The result gives us 10,928 naira. Then you subtract 2,762 naira from 25,000. The result gives us 22,238 naira. You subtract 1,381 naira from 16,075 naira. The result is 14,694 naira. So if you add the total, it will give you the same as that of the credit side. If you add 800 plus the cash, you are arriving at 13,800. You add 22,238 naira plus 2,762 naira. The total gives us 25,000. Then you add 1,381 naira plus 14,694 naira. The total gives us 16,075 naira. Total. These are the totals that we are going to take. This cash, we are taking it to the cash account, which I have told you. The total of this capital balance must be the same with that of the cash account. We have 10,928 naira, 22,238 naira, then 14,694 naira. Let's go to the cash book. You will see what I'm referring to or talking about. Let's go to the cash account. Yes, you see here 10,000, their balance is there. You see their balance is 10,928 naira, 22,238 naira, 14,694 naira. They must be the same with this one. Once they are not the same, your account is not correct. That is, if you add them here, you are going to get 63,780. The same with 63,780. This is what I have for you under dissolution of partnership. The summary, the subtopic, dissolution of partnership under partnership accounts was successfully and adequately presented. I discussed the definition of dissolution as the coming to an end of a partnership agreement. Then the reason for the dissolution of partnership, rules for distributing of assets and entries in books of account were extensively discussed. Furthermore, the realization, cash and capital accounts of partners were clearly treated for you. Then I have an assignment for you. 1A, what is dissolution of partnership? B, state 5 reasons for the dissolution of partnership. 2, Section 44 of the Partnership Act states that, subject to agreement, some procedures and rules must be followed in discharging the liabilities of the partnership. State 5 of these rules or procedures. Number 3, attend question 25.2, page 261 in Essential Financial Accounting textbook for senior secondary schools by O.A. Longe and R.A. Kazim. Now, as usual, I remained your accounting teacher, Mr. Jameson Yaro, and in case there are gray areas regarding what I've just taught you, and you need clarification or more explanation, you can contact me through this number. 090-4695-7453. I repeat again, 090-4695-7453. Stay home, stay safe, keep on learning.